In this video, we're going to look at a narrow range breakout strategy using a narrow range for the trade setup and then an opening range breakout for the entry. It's not my idea, so I'm certainly not taking credit for it. It's an idea from Toby Crabel, and I found the strategy on a great resource page from a website called Oxford Capital Strategies. And they're calling the strategy a 2-bar NR pattern combined with an opening range breakout. They, at Oxford Capital Strategies, have already done a great deal of testing across 42 of the futures markets. So today, I'm not going to test futures markets. I'm going to test the strategy across 14 of the Forex pairs. In principle, this strategy is quite straightforward. However, there are quite a few calculations, and it was one of the more challenging strategies for me to actually program. But I taught myself some new things in programming along the way, and I think it was worth it because we actually came up with some pretty decent testing results. The entry setup for the strategy and the entry trigger are the same as what's listed on Oxford Capital. However, I've reduced the amount of exits to simplify things. So in this video, we're just going to look at one of the exits. So instead of combining all the exits into one strategy, I'm actually splitting it up into separate tests so we can see what works and what doesn't, and to simplify the testing results. And although I'm only using one of the exits, that one exit is in addition to two other exits, being one of them being a stop loss and the other one being a stop and reverse exit, which is an entry to a trade in the opposite direction. Anyway, let me explain the trade setup, the entry trigger, and the exits that we're going to be looking at. The first thing we need to look at is the trade setup. Now, I've mentioned it's based on a narrow range 2. The way we look at a narrow range is we're looking at the daily chart and we put the average true range, or the ATR, and we're going to use a 2 period, so it's the average over the last 2 bars. And we want to see that average over the last 2 bars is the lowest average over the last 2 bars looking back over the last 20 days. So we need to see that lowest value over the last 20 days or 20 bars. And that's how I calculate our narrow range setup. Once we've got the setup, we can go on to the entries. Now, the entries are some more calculations. Number one, we need to calculate the average noise, and noise is what Oxford Capital Strategies call it, over the last 10 days. So we're looking at the noise over the last 10 bars. Now, the noise is either the open minus the low, or the high minus the low, whichever is the smallest value. So we calculate that for the last 10 bars, we add them all together, and then we divide them by 10 just to get the average. Once we've got the value, then we move on to step 2, which is multiply that value by a fixed multiple, and we're going to use 2. In Oxford Capital Strategies, their tests were fixed at 2. And then we're left with the value which they call the stretch. Once we have that stretch value, then we go on to number 3, and we place a buy stop order at the day's open plus the stretch value, and a sell short stop order at the open minus the stretch value. So let's say that stretch value is 20 pips. We look at the opening price and we add on 20 pips and place a buy stop, and we subtract 20 pips and place a sell short stop order. We're only going to have one trade per day, so the first trade which triggers, then that's the only one we're going to take that day. Let's say that the market rallies from the open and it gets us into a long trade. Then we cancel the order for the short order, but that order then becomes the stop loss for the open long order. Okay, so that goes on to number 5. Stop loss is the opposite order. So that's our setup and our entry. Once we're in the trade, we need to look at the exits, and we have 3 exits. One is going to be the stop loss. I've just told you what the stop loss is. It's that opposite end of the order, depending on which order gets triggered first in the day. We've got a stop and reverse exit, but only after the first day using a brand new setup. So that means if we're in our long trade, and let's say that we're in the long trade and we've been in it for 2 days, we haven't hit our stop loss, but after that 2 days, we get a new narrow range 2 setup, and then that's going to give us a new buy and sell short order. Then if the market opens, then declines, gets us into what would be a new short trade, we would exit the trade that we're already in from the long trade and enter a new sell short trade with a new stop loss. So we'd be treating that as a new trade. And then number 3, we've got the timed exit, and we're going to test this timed exit. We're going to test exiting after 3 days, 6 days, and 12 days in the trade. I've just picked these numbers. We could have had 1, 2, 4, we could have had 1, 5, 10. I didn't want to go much more than about 12 or 15 days. Now I've got a note there. I believe that a robust strategy on any market should show positive results on all of these durations. And for the ease of testing, I'm just testing 3 different durations in multiples of 2. So we start with 3, multiply it by 2, we get 6, multiply it by 2, we get 12. And that's just for ease of running the back test. I could have tested anything from 3 all the way to 12, so 3, 4, 5, 6, etc., or started at 1 and gone to 12. But for ease of testing and making the results a little bit tidier, I'm just doing it like this, 3, 6, and 12. For those of you who haven't seen my last couple of videos, I'm in the process of creating a strategy database for you guys. Each week, I test a different strategy across a bunch of Forex markets. I'm going to give you all free access to the strategy database where you can sort through the strategies and see which ones work best or which ones work most favourable to you. And for each strategy, you'll find the video link to the video which I've created all about the strategy. For today's strategy, I'm testing it across 14 different Forex markets and I'm testing 3 different exits. So that totals 42 tests. Plus, I'm going to test the portfolio of markets across those 3 different timed exits. So that's an extra 3, totaling in 45 tests today. I'm using Oanda's data from January 2008 through to January the 6th, 2023, and I'm going to use Multicharts' Portfolio Trader to do the testing. All the results you're going to see are going to be in pip value rather than the currency of the Forex pair tested. I've coded it this way especially to kind of normalize results across the portfolio with the different currencies. So let's go and have a look at the results using the first timed exit. This exit is going to be exiting after 3 days in the market. It's actually going to be 3 whole days. So if we entered a trade at midday, then we hold that trade until the end of the session, which is 1700 Eastern Standard Time. And that's going to be 5 hours. So that's not a whole day. So we'll hold that for 5 hours. And then after that, we'll be in it for 3 whole sessions. And at the end of that 3rd session, we'll be exiting at 16:30 or half hour before the end of the Forex session. We're in the portfolio trader now, and you can see down here we've got the 14 different Forex markets. Here we've got the strategies, and I'm using this strategy here with the first of the exits, which is the 3-day exit. So let's have a look at the performance report. Remember, these results are in pips and we haven't got any costs added. So even though some strategies might look profitable, they're only profitable if we have an average trade value which is large enough. And we'll talk about that as I go through the results. So this is the combined portfolio, and we can see it's making money over all of the markets. That's what the equity curve looks like. Over the portfolio, we've only got an average trade of 3.6 pips, which by the time we've paid trading costs, that's not going to be large enough to make money. So some of the markets aren't making enough money. So let's have a look at those markets individually. And here's the results looking individually. We can see that Australian US dollar isn't making money. Canadian dollar, Japanese yen is making money. Average trade 5.9, that's a little bit small as well. Equity curve isn't that great. Euro pound isn't making money. Euro yen is making money. And quite a nice equity curve. I like that. So this is Euro yen. We've got an average trade value of almost 24 pips. That's more than enough to be making money. For this sort of strategy, anything above 10 pips is pretty good, is going to be making money by the time we've paid trading costs. So that was Euro yen. Euro, New Zealand dollar, this is making money. Average trade, 14 pips, that's good. Equity curve isn't so good, is it? Euro dollar, it's making money. Equity curve, not that great. Average trade value, only 5.7 pips. Pound Canadian dollar, not making money. Pound Japanese yen, making the most money in this test. Average trade, 48 pips, that's large. Equity curve, really nice. So that's definitely the best so far. That's pound yen. Pound dollar, not making money. Let's just have a look at the equity curve. That's what the equity curve looks like on pound dollar. And we can see which markets respond to breakout trading and which markets don't respond well to breakout trading. Obviously, in this case, pound dollar doesn't respond well to breakouts. New Zealand dollar, Canadian dollar is not making money. New Zealand dollar is making money, not a lot, but the equity curve's reasonable. And the average trade is very small, only at 2 pips, so that's not particularly good. US dollar, Canadian dollar, not making money. US dollar, Swiss franc. Average trade value, just over 5 pips, that's pretty small. Equity curve is going up, it's not the best. And the last one is US dollar, Japanese yen. It is making money. That's the equity curve. Not very good. I mean, it is going up. It's certainly flat within the last few years. The average trade value is 13.36, so that's pretty good. And that was all of the 14 pairs. So we've already seen some profitable results using that exit after 3 days in the trade. Next, we're going to look at the other 2 timed exits, 6 days and 12 days. Notice I'm doubling the time every time. So we've gone from 3, double it to 6, double it to 12. As I've mentioned, I'm doing these tests to build a database so that we can all access it to see what works and what doesn't work in the markets, adding to those strategies each week. But if you want 3 older time-tested strategies, then you can get my 22-page Beat the Markets strategy guidebook, and you'll find 3 more strategies in there. I list out all the strategy rules and I give you a load of the backtesting results. At the moment, if you find the link down in the description, you can get it for free. I've got some even better strategies in my trading course too, another 6 rule-based strategies. And in the course, I'll show you how to allocate your money to each of the strategies so that you can maximize the profits but minimize the risk. You can find the links for that also down below in the description. Okay, let's go and have a look at the 6-day exit for this NR2 pattern. Now we have the second timed exit selected, which is going to be 6 bars. So let's have a look at the results. This is the complete portfolio. So again, complete portfolio is making money. Looks like it's making a lot more on the short side than the long side. That's what the equity curve looks like, reasonable. Looking at the total trade analysis, the average trade is still low, about the same as before, 3.65 pips. Looking at the individual markets, Australian dollar, US dollar, not making money. Canadian dollar, Japanese yen, making money, not a lot. Very low average trade at 2 pips. Equity curve's not great. Euro pound, not making money. Euro yen, this one's making money again. And a nice equity curve, better than before. What's the average trade like? Average trade is large at 22, almost 23 pips, so that looks a usable strategy. Euro New Zealand, average trade is decent at 27 pips. Equity curve is better than before, not the best though. Euro dollar, only making a very small amount of money. Equity curve's not very good. Pound Canadian dollar, not making any money. Pound Japanese yen, making the most money as it was before with the shorter exit. Equity curve's nice. Very large average trade at 51 pips now. We get a larger average trade because we're holding the trade that much longer and we can catch more of a trend. Pound dollar, still bad, like it was with the shorter 3-day exit. New Zealand dollar, Canadian dollar not making money, New Zealand dollar, dollar making money again. Reasonable equity curve. I expect it's got a small, quite a small average trade value, only 5.4 pips. Not really something I'd want to use. US dollar, Canadian dollar, not making money. US dollar, Swiss franc, making money. Average trade, almost 7 pips. Equity curve's not that great. And lastly, again making money, US dollar, Japanese yen. Equity curve, similar, possibly a bit better than before. Average trade value is 12.16 pips. That's something that is usable by the time we've paid some trading costs. So that's the 14 pairs using the 6-day exit. And now we're looking at our last exit length, which is 12 days in the trade. As the portfolio, it's making money. Nowhere near as much as the other two lengths though. Equity curve shows that it's not very good. But let's have a look at the individual markets, because we know some respond much better than the others. Australian dollar, US dollar, still not making money. Canadian dollar, Japanese yen, making a little bit of money. Average trade's fairly small at 4 pips. Equity curve's not very good. Euro pound is not making money. Euro yen is making a little bit of money. Equity curve, not that great. Euro New Zealand dollar. Equity curve, not very good. Average trade is quite high at 16 pips. Euro dollar's not making money. Pound, Canadian dollar, not making money. Pound Japanese yen is again making the most money. Average trade value is 41 pips, that's pretty good. And the equity curve is still reasonable, like the other lengths. Pound dollar, not making money. New Zealand dollar, Canadian dollar, not making money. New Zealand dollar, US dollar, making a little bit of money. Equity curve's quite consistent. I expect it's got a small average trade, 8 pips, larger than before, possibly usable by the time we've paid a bit of costs, but not that great. I'd like to see that a bit bigger. US dollar, Canadian dollar, not making money. US dollar, Swiss franc, making a little bit of money. Small average trade at 3.88 pips. And the equity curve is not very good. And the last one, US dollar, Japanese yen, it is making money. Equity curve is not that great. Average trade at 12 pips is something that is usable. So that's the final tests using the timed exit, and in this case it's the 12-day exit. Well, that's the test results for this strategy using the timed exit, and pleasingly I think there's some fairly decent results in there, especially with the yen-based pairs. It makes sense for my next video to be testing the same entry as we've seen today, but not with the timed exit, with a fixed profit target based on a multiple of the risk. So I'll be running tests on the reward to risk ratio, 1 to 1, 2 to 1, 3 to 1, I'm not sure yet, but I expect there'd be 3 tests, a little bit like we've seen today. If this strategy is robust on any of the markets, then I expect to see positive results using that exit too. I'll record the results which we've seen today in the strategy database which I'm building for you guys. If I'm happy with the layout of the database at the moment, I'll leave the links for that down in the description. If I haven't quite finalised it by the time I upload this video, then I expect it to be ready within a week or so. I'm really happy how this strategy testing series which I've started is going already. It's a win-win for everybody. I get to test new strategy ideas, and in turn I'm improving my programming skills. You guys get a new video and we all get access to possible profitable new trading strategies. So I hope you've enjoyed this video, and I hope you'll enjoy the testing series to come. If you have, please give it a thumbs up and subscribe to the channel for more of these videos. That's all for today though, but I hope to see you next week for another testing video. But until then, this is Jared Goodwin, and thank you.